right, good morning, everyone. So it's about 9:05, starting the morning show just a little earlier today. Not much going on in the small cap world. It's still kind of slow, just waiting for those good opportunities to present themselves. I'm green on the month right now. Had my 5th green day in a row yesterday, but not making big gains, just catching a couple base hits here and there, trying to keep my head above water until the next kind of INDO like we had last week. This one paid pretty nicely. So waiting for something like that to show up, and when we start seeing something moving like that, we'll know. We won't have to guess. We'll know. So just have to wait. Bigger gap down on Facebook this morning. And yes, reminder as always that trading is risky and my results are not typical. So I do encourage you to take it slow and trade in a simulator before you put real money on the line, especially those maybe tuning in for the first time on YouTube. Thank you for tuning in on YouTube. I hope you hit the thumbs up and enjoy the morning show. This is going to be a watch list. I may do some live trading if there's something that presents an opportunity. Happy to do that, but that'll be if something presents an opportunity. I've already been streaming for a while for Warrior Pro students in the chat room, and will continue streaming until I'm finished trading and have taken my last trade of the day. If I haven't taken a single trade by 10 a.m., then I wouldn't take any trades. That's my hard cutoff. It's kind of a rule of thumb that I've found that if I haven't gotten green by 10 a.m. and then I start trading at like 10:15, 10:30, that typically doesn't end well for me. So that gives me a window, up until about 10 a.m. to find my first trade. Facebook is not my go-to stock, as you may already realize. So the float on Facebook is 2.5 billion shares. 2.5 billion shares. All right, it's a huge float. It's got 7.8 million shares of volume. It will have high relative volume today. That is for sure. There's no question about that. It's already on 37 times relative volume. Yesterday, the total volume on it was 58 million shares, it looks like, which was increased because, of course, the after-hours sell-off, which was the highest volume in that little kind of sell-off that it had in a while. So I'll give you my analysis on it. Daily technical levels, you have support at about 244.61, and that is a double bottom. So that is a pretty significant level. That could be a level to look for a dip trade, but we know that earnings and guidance were poor and is not being received well. At the same time, it's going to be a double bottom coming into that level. It would form a triple bottom if it bounces right there. So that could be a decent spot for a bounce. The one before that was about 253, but we're well below that now. And then there was a small level at 247.25, which was the low of this candle here. But the problem with this naturally is that it's $246 a share. So I even in my retirement account, I think I have around $670,000 or something like that. I can only buy like 2,000 shares of this, 2,500 shares. I cannot take a very big position of this stock. My margin account has leverage, but it doesn't have that much money in it. So I can't do much over there. And my goal is to not trade in that account too much because the income in the margin account is taxable. The income in my retirement account is, of course, tax-free. And I'd like to keep it that way. So keep my profits that way as much as I can. So, yeah. And so at this point, while there may be some opportunities on Facebook, the price is a bit of an obstacle for me, even now. And this is why some traders would like to have that $600,000 in a margin account. 6 times 4 is 2.4 million. And on the off chance that you have a stock like this that's moving, you could take 10,000 shares of it. But, if you make 40 grand or 50 grand on it, which would be, 5 points on 10,000 shares, well, don't forget, half of that, going to Uncle Sam. And depending on what state you live in. If you live in California, you could say goodbye to half of it. But if you live in New York, Massachusetts, it's close enough. You know, you're in the 40s in terms of percent of taxable income there. So these are short-term capital gains, tax at regular income levels. They're not a long-term capital gain. So it's hard enough to trade without half of your profit being taken away. Now, that's obviously when you're at the top income bracket. If you're at the bottom, then it's different. And for beginner traders, and when I was getting started, I started at a level where I didn't have a lot of taxable income. So it wasn't too bad. And of course, made good decisions about making sure to keep close tabs on the amount of money I spent on software, right? Because that's as you're making money, if that's your business, and that you could deduct that against your gains and things like that. Obviously, not to give tax advice, but just to share with you some of the things that I think probably make sense to look at. So, in any case, I encourage all of our students to set up a Roth IRA and to trade in your retirement account as much as you can, because it's doing yourself a favor. You know, it's for you in the future. So I would encourage it. But in any case, this morning, so 2 issues. So I can't short Facebook in my retirement account, because you can't short in a retirement account. So I'm not allowed to do that. And I don't have leverage in a retirement account. So I can't take big positions, which means I do have to leave a higher balance. But even right now with a $600,000 balance or whatever it is, that's not quite enough to be able to do much on this one. So let's see. I could just check down here my balance at the end of the month. So my balance was in the retirement account 671. Yeah, at the end of the month. So about 671. So it's a little higher now, but not a lot higher. So that just doesn't, it just doesn't give me a lot of room to work on something like Facebook. Now, again, for a swing trade, you know, if I did a dip off of 244 and held it for a couple days, but with the earnings and the guidance being negative and not received well, I don't know if you're going to see this knee-jerk reaction of a big sell-off and then a pop, or if you're just going to see a more sustained pullback for a longer period of time. And on the other hand, Google, news of the split that they're going to do and good earnings. So do you see money go into a stock that is just performing better? Maybe. I'm not sure, but I'm not going to take swing trades, and I don't have the cushion on the month or the cushion on the year to take sort of higher risk speculative trades. So it's about 9:15 right now. I haven't taken any trades yet. I'm interested to see if we have something that starts to pop up and then becomes a bit obvious for small cap traders. I know small cap traders are getting antsy. We're waiting for something. So when we get something that starts to open up and look exciting, you'll certainly have people jumping off the sidelines to try to take a stab. But right now, it's just about being patient. I'm not really familiar with this one. Is this so natural gas short. Yeah, so that's an ETF. So I don't have a lot of interest in that. So yes, AMC is volatile, and certainly some people would be happy to try to trade it each day. The relative volume is a bit lower, so that one for me is just not really interesting enough. So back to the near top of the scanner to answer your question there. BON, why am I not looking at that more closely? Well, the news was after hours, and it moved on the after hours news, and it's continued squeezing pre-market all the way to 6, but now it's back at 4. It is a somewhat recent IPO. I like the idea of it, but it's pulled back too much. So that's disappointing. So right now it's below the VWAP. It just doesn't look that great. BCDA, this one, the float is 14 million shares. The price is now under 2, and it's below VWAP. So it's just not really that interesting right now. I'd prefer not to trade these lower price stocks in any case. I seem to be doing better between 5 and 25 than, certainly under $2. Between 2 and 5 is fine, but I just seem to do better when the price is a little higher. We see bigger range, more volatility, and it's just easier to move in and out. With a $1.50, $2 stock to make $10,000, you're going to need 20,000 shares in a 50-cent move. But if it goes up 50 cents, that's a 20% move in one trade. That's a pretty big move. It's not impossible, but that's a big move. So then you start thinking, well, I could take 50,000 shares, and if I get 20 cents, but you'll find that even getting 20 cents a share on these is not always that easy. And then you've got a big position. You might have gotten some slippage getting in. You're going to get some slippage, when you get out. So it starts to be a commission churning type of situation. So what do I think of traders who trade the same stock in order to specifically learn how they move? I've certainly heard of that over the years, traders that, focus on trading Tesla every day. Some of those traders that I've talked to have said things like, well, if it goes down, I don't mind holding it overnight because I really like Tesla. So, then they get into holding it sometimes overnight and kind of averaging down and stuff like that. And that if it works for them, that's fine. If they're really comfortable holding the stock, through a longer period where it's pulling back, then that's okay. I've asked, well, what if you got in at 1100 and it's pulled back this much? What are you doing on the days sort of in between? Do you just not trade? Because if you're getting in and out, you're changing your cost basis. Some have said, well, I have more than one account. I have a retirement account and a main account, so I can kind of, even if I'm still holding on one, I can trade in the other, or vice versa. So, anyways, I think that that's interesting, but I think it's easier said than done. I think it's actually a bit harder to be consistent just trading the same stock every day, because you're going to be trading it on days where it has relatively low relative volume, and moving in and out with small positions might be easy, but if you want to try to scale that up to bigger positions, it might be hard. And you could have some institutional trader who, a Bill Ackman type of person who's like, oh, okay, hey guys, why don't you go sell my 1,000,000 shares? And all of a sudden it's, 1,000,000 shares hitting the market. Yes, there was a time where I didn't take pre-market trades at all several years ago because we really didn't have a lot of volume pre-market. You would have a stock that had news, but maybe only like 10,000 shares of volume. And traders would wait to the bell, until the 9:30 bell for the most part. There was a little volume pre-market, but just not a lot. And then it just started that we were getting, I don't know. I think the traders started just not wanting to wait to the bell. So if you saw a stock that had news at 9:15, it was like, well, these always seem to spike up at the open. I'm just going to get in here at 9:15. And then some people were like, well, maybe I should get in as soon as the news breaks at 9, and so on and so forth. So now it seems like it's a race to jump in as soon as the news breaks, which is not surprising. I kind of thought that would be the direction. That's the result of more participants in the market. Traders trying to get a jump on each other. So we've got about 5 minutes to the bell. So far, the gap scanner is pretty much unchanged. Facebook in that one candle just dropped 2 points. All right, so what's the deal there? Look at that big red candle. Where'd that come from? It was a 10-second candle, 100,000 shares. You know, is that just one? You know, it's like what? All of a sudden, 2-point drop. Well, Facebook probably won't get halted up or down today. It's not that it couldn't, but I'm not sure that it's going to move enough to get a halt. So you could look at a Facebook short at the open for a sell off to 244 and then a possible long off 244. But realistically, it's already down 23%. From 46 to 44 is only, at this point, $2 a share, $1.50 a share. It's at 45.80 now. So you don't have a lot of opportunity to the short side at this point. It might make more sense just to watch it for a long off of 244.61 and just see how it trades at that level. Hang on one second. So there's 244.61, just about. So if it breaks that level, what's the next level? Around 234, 235. So typically at the open, I would expect a little capitulation sell-off. Since it's right at this level, that makes me think that it's going to break it. I could be wrong, but I'm not sure that it's going to hold this level since it's coming into the open right at that level. That's not going to allow for the panic selling at the open. So I don't know, just something to keep an eye on. No small caps yet on watch. For those tuning in on YouTube, thank you for tuning in for the morning show. Appreciate it. We'll see you guys next week. I'm going to be out tomorrow, but I'll be back at it next week. And hopefully we have a little more action in the small cap world because it's been slow. But we will. It's ebb and flow, and we always see these cycles. So manage your risk. Take it slow. Reminder that my results are not typical. And I'll see you guys next week.